Hi grade 11s, and we're on the move again, and this time we're on to a new topic called financial statements. Now you did financial statements last year, so I'm just going to do a brief summary and refresh your minds about our income statements. As I've just said, income statement, that is the first of our financial statement. And income statements show all the incomes and expenses of a partnership. Because remember, last year we were doing a sole trader. So last year's income statement would have shown all the incomes and expenses of a sole trader. This year we are concentrating on partnerships. So let's have a look what goes into an income statement. And so I have broken the income statement down into sections, and I'll work through it section by section. So let's look at the first section, which is in fact your trading account in your general ledger. So the first thing we're going to look at is we are going to take our sales and we are going to subtract our debtors' allowances, because that will give us our turnover or our true sales. Just a little bit of refreshment. Debtors' allowances is when the debtors return goods which they have previously bought from us on credit, and so we can't count those as sales. Hence, we are going to subtract debtors' allowances. So we are now working with either turnover, net sales, or just known as sales. And then we are going to minus our cost of sales, and that is going to give us our gross profit. Now remember, gross means large in English, and you teenagers use gross as in ugly, but here it's not ugly. Here it is the large profit. And so how will this look in my income statement? And so remember, we have to do bracket work. And so I'm saying sales, 110,000 minus my debtors' allowances will give me my true sales, turnover, or net sales. Please become accustomed to the terminology, because in a test or an exam, we could give you any of that terminology and we'd expect you to know it. I'm now going to subtract my cost of sales. You will notice that I have indicated the amount in brackets, because you do know in accounting that whenever we subtract anything, we put it into brackets. And so I can now establish my gross profit, where I'm saying sales minus cost of sales equals gross profit. I'm sure you're starting to remember that we did this last year. So let's move on to section 2. So in section 2, we are going to list all our operating incomes. So section 2 concentrates on our operating incomes. We're going to list them, we're going to add them, and we are going to add them to our gross profit, because that will give us our gross operating income, but we'll get to that. So what operating incomes can be included? Rent income, bad debts recovered, provision for bad debts adjustment, discount received, commission, fee income. Please note, there's no interest. Remember, interest goes right at the bottom of our income statement. So these are operating incomes, and you will also remember from last year that my interest is a financial income and not an operating income. So let's have a look what this would look like in our income statement. Now, you will note that the first 3 lines is what I did just now. It was calculating my gross profit. So now I've got another heading called operating income, and I've just put in variety. Please, you can't write variety. You will have to say rent income, commission fee, etc. And you will have to list them one by one. You can't just write variety, but obviously space is prohibitive here. So I add up all my operating incomes, and we could have 4 or 5 of them, and the answer is 30,000. I'm now going to say 50,000 plus the 30,000 of my operating income will give me my gross operating income of 80,000 Rand. And so that is section 2. So, as this is a revision lesson, let's just refresh. Section 1, I want to calculate my gross profit. How do I calculate gross profit? Net sales minus cost of sales equals gross profit. Section 2, I'm going to add my operating income to my gross profit. Again, we're going to list them here. We could have 3, 4, or 5 of them. Add them up. Got my answer here of 30,000. And I then say my gross profit plus my operating income will give me my gross operating income. So what's in section 3? I hope you can remember. It's my operating expenses. There we have it. And they're going to be listed one by one. And you can't just write variety like I did. You're going to add them up. And we are going to subtract our gross operating income from our gross operating expenses from our gross operating income. So operating expenses, what are they? Stationery, wages, depreciation, bank charges, bad debts, discount allowed, trading stock deficit, water and electricity, telephone, provision for bad debts, adjustment. Just to refresh your minds, remember our provision for bad debts adjustment can be an income or an expense account. So how does this look in our income statement? Again, you will note there is my gross profit. I have now got my operating incomes. And now we're going to have our operating expenses. Again, you are going to list them one by one. You are not going to write variety. You could have anything between 6 and 12, and you're going to list them one by one, add them up, and you are going to get an answer. And in this case, the answer is 25,000. Again, please note, it is in brackets. Bracket simply means we are going to subtract it. And so we are going to say 80,000 minus 25,000, which will give me my 55,000, which is my net profit before interest income. Right, I'm sure this is all coming back to you. Let's look at section 4, which is our interest income account. Now, you could be given an interest income note under your balance sheet notes, and you could list them there and then simply transfer the total from the interest income note to the income statement, or if you don't have it, you would show it in brackets. But let's go to the slide and let's have a look. So the interest income will be calculated in the financial statement note number 1 and is reflected in the income statement, which is what I said to you. You might be asked to calculate interest. Now, remember we use the method of ART. ART represents the amount multiplied by the rate multiplied by the time. And so there's my amount, my rate, my time, which gives me my ART. Okay? All right. And so, as I said, if a note's not required, you're simply going to do bracket work in your income statement. Let's have a look. Right. And so, again, everything that is in white is what I have done previously. So now I want to show you how to record interest income. You will note here that I have shown the work in brackets, and remember you get marks for bracket work, so please always use bracket work. And so there was 1,000 rands interest plus 4,000 rands interest. I can indicate note 1 over there, and that gives me 5,000 rand. And I now say 55,000 rand, which was my net profit before interest income, plus my interest income, will give me my net profit before interest expense. Okay, So 55 plus 5,000 gives me 60,000. Now, I know that some of you probably say, could we not use interest expense first? The answer is no. We do the good things in life first. And to receive interest is far better than to spend interest. So we always put interest income first and interest expense second. And so we are now going to look at the last section of our income statement, and that is interest expense. Now, like with interest income, it can be done as a note in your balance sheet, or alternatively, you could just show bracket work. And because it's an expense, we are going to subtract it. So it will have to be in brackets. So let's have a look and see what it looks like. Again, everything in white is what I have done previously. And now I'm going to add my interest expense. So the example here is I haven't done bracket work because I have calculated the interest in note number 2. It amounts to 2,000 Rand. Remember, it's an expense, so we have to subtract the expense. And so I'm going to say 60,000 minus 2,000 gives me 58,000, which is my net profit for the year. Now remember, just as a little sideline, and I'm sure I told you that last year when we did income statements, that when businessmen refer to the bottom line, they are referring to the net profit. Why? Because it's the bottom line of the income statement. So I need you to desperately learn the format of the partnership income statement, because the income statement is going to be examined throughout grade 11, and I promise you it will be in your prelim and your final paper next year. So learn it. You know it's going to be there. Just become totally au fait with it so that you can literally do it in your sleep. And we'll meet next time and we'll revise the balance sheet. Cheers for now.